Hello everyone, this is ZIZA. I'm going to be taking you through ZIZA FOREX strategy. Like always, please feel free to subscribe, like, comment, and share the YouTube channel to different traders so that they can learn from this strategy. Like in my previous videos, we're going to go through straight to the charts. And these are live markets. Okay, this is going to be a recorded video, but these are the live markets basically. So we have been back testing, but I wanted to show you how the strategy works on the live market. And I was requesting that you kindly push the channel to 50 subscribers so that we can have live videos on this channel. So like I always tell you, start from the daily. Let me first remove these lines. Okay. So usually start from the daily to get the daily trend. As you can see, price was initially going down, but now it's going up. Broke this daily trend line, so it's now going up. Broke it right here. It's forming higher highs and higher lows, right? All right, so we go back straight to marking. We mark our highs and our lows. So before price forming this candle, this is where we were. Okay, we were about here, around here. So usually I mark the low and the high. So then I mark a candle that shows price as if it's this bearish candle, not these ones. Just mark a candle that appears to be as if price is going down, right? That's what I call it. I'm trying to find a better term, maybe a kind of interest. Yes, a kind of interest sounds better. All right, these are terms in this channel. All right, so kind of interest, we mark our kind of interest, a daily kind of interest, and we go to 1 hour. And 1 hour you look for a trend. Now the trend we're looking for is the one that is, I would call it a counter trend, a trend that is not following the daily trend, right? Which is the 1 hour trend. So this one is going down, but our daily is showing that we're going up, right? All right, so let's mark. So we mark in areas of interest, points of interest. So 1, 2, 3, 4. The more the better. So now that we've drawn our trend line, we can have various variations to our trend line. Some people may try to do it here. So it varies. So let's put it here. So after that, we look for an area of interest, which is basically a fair value gap, which is here. Okay. Another area could be here. So this fair value gap is just showing a move that caused the break in this trend line. So always look for a break in this trend line and look for the fair value gaps generated in that move. So other people can have different terms for this area. Fair value gap, might call it areas of interest. Really doesn't matter as long as we understand what it means in our trading style. Yes, so as price went up to this area, okay, that I'm pointing towards, we look for a retest in that area. So this area or this area. So then we look for candle patterns. In this regard, we have to look for a bullish engulfing candle pattern because our prediction is probably upwards. Now, before we reach there, as price is going there, we also have to look at this RSI for this candle. showing it's oversold, right? It's 28. Okay, so it gives us a psychological direction that probably price is oversold and may go in the opposite direction. So this oversold price is the one generating the break in the trend line. So other people could look for a divergence. Okay, or was there a divergence? So this point is 32. No, the lowest point is around here. The previous low 39. 39, so there was no divergence, but still it was oversold. So it gives us more confidence in the direction, just confidence, not a guarantee. Okay, so now we'd look for engulfing. So we had one bullish engulfing kind of pattern, right? So when there's one, I look for another one. So in this case, there was another one formed here. So I would enter right here and put my stop loss slightly below this. Let me show you. I would enter right there, put my stop loss somewhere here. So in my stop loss, I would either wait for a close of a candle below it, okay, in that area where my stop loss is, or I would wait for a wick or any candle just hitting it would be enough. Then I would look for one more trade. I only trade twice. If both my trades are wrong, I wouldn't. I would leave the markets and look for another area to trade. So I'd make a loss, basically $12, right? Then I'll look for another trend, another trade, sorry. And this one, this area, like as you can see, there's another candle here, right? So I'd enter here. But the problem with this candle, it's too, I would say, wide. Okay, it covers a long area, a large area. So my stop loss would be quite big, so it would be a higher risk. So I wouldn't enter it. I would instead look for another bullish engulfing, which is here, right? Which is around here. And put my stop loss around here. So you can have different areas on depending on your personality where you can put this stop loss. So I usually I'll put it around here, just below this wick here. Okay, yeah. So now you can see price wick. So I consider two things. I would either consider if price moves to that point, it wicks me out, or the close of the candle as price is hitting that point. As you can see, these candles did not close where my stop loss is, right? They just came and wicked. Okay, so I usually look for a close at this area where my stop loss is, or even slightly below the area of this line where the stop loss is. So they didn't close in that area. It decided to have price just went up and closed higher. So I would have waited for the close of the candle. As you can see, as you will see in my previous videos, I usually either wait for a wick or a close of a candle to get out of the trade. So in this case, price did not close. So now my profit targets would be the high we marked, because we assume price is going up, right here where this line is, which is $155. I don't know, this sounds to be a 1 to 10 risk to reward, or 1 to 15, something like similar, or 1 to 14. That is how I would trade this currency. So this is 0.1 lots. If it was 0.01, it would be 15. If it was one lot, it would be $1,500. If it was 10 lots, it would be 15,000. If it was 100 lots, it would be 155,000 in this trade in a period of 2 days. So this just shows you that the strategy is viable and it works. And I think we shall be seeing more of it as we trade along in the live chats. Yeah, so um, I hope this information helps you in your trading. I believe trading is more of where you put your stop losses because you're guaranteed to make losses. And at the end of the day, you need a strategy that is going to generate more wins. Okay, even if it's not more wins, as long as the risk to reward is always in your favor, you always make profits at the end of the week, of the month. So I hope this information helps you. Please subscribe and share this video with Forex traders. Please comment as well. You can reach out to me if you can on email. I'll see how I can put my email attached to this video so that we can share thoughts. Thank you very much.